A type of investment fund that's become increasingly popular in recent years is the thematic fund. As the name implies, these funds focus on a particular investment theme. It might be biotechnology stocks, for example, or firms that will benefit from more working from home. Alternatively, it could be an emerging economy like Thailand or Malaysia. As the investment strategist Nicholas Rabener explains, thematic funds can be very attractive to investors.
Another way of defining thematic investment is calling it performance chasing with a narrative. And unfortunately, retail investors as well as institutional investors do tend to chase performance, which makes thematic investment so seductive. Because on the one hand, you have a great story, the rise of artificial intelligence, and you have a bunch of stocks that effectively have generated nice returns. And it's of course very easy to fall into that and subscribe to that.
The fact that these funds have a narrative and are therefore easier to market also makes them attractive to fund management companies. But there's another reason why the industry likes them so much.
The second component for asset managers, why they do like thematic investments, is because they can charge higher fees. So if you look at the fees of thematic investments, today they're round about between 50 and 75 basis points versus plain vanilla indices like the FTSE 100, it's between 0 and 30 basis points. So because it's a bit more complex area, asset managers can charge for that, and that of course is to their liking.
So how do thematic funds tend to perform? Unfortunately, the evidence is not very encouraging.
There's a lot of research, including our own, that indicates that performance chasing is negative and effectively means that investors underperform compared to simple index. And the easiest example would be simply looking for the best performing fund as of today, that on average you're going to underperform with that. And the reason for that is that most of the time when investors enter a certain theme, that it has already had a lot of inflows, valuations have peaked, and it's just become expensive. And then it does tend to correct after a certain amount of time. And the best example would be technology stocks in 2000, where effectively everyone wanted to be invested, but at some point there weren't a lot of natural buyers left, valuations were expensive, and therefore on a going forward basis, investors underperformed.
In summary then, thematic investing is essentially performance chasing, jumping on a bandwagon when it's too late to benefit. Investors are usually better off investing in plain vanilla index funds. Or if you want to try to outperform the market, you could consider factor investing. But don't be seduced by the latest investment themes.